Hello there, Aaron Real. Joining me today from the floor of the New York Stock Exchange, we have Wendy Holmes, a wealth manager at Hidden Oak Partners of UBS Wealth Management. Wendy, thank you so much for being here today. I want to start by talking about volatility. We're seeing so much of it in the markets right now, whether it be geopolitics or whatever the headlines might bring, particularly on a day like today. So, what's important for investors to have at the top of their mind right now?
So first, thank you so much, Aaron, and thank you so much for the team at Asset TV for the opportunity to join you. This is one of my favorite topics because it's what I talk to clients about all day, and it's how to manage and understand volatility and how it impacts their portfolio. A day like today, we have a Fed meeting this afternoon. What's interesting about today in particular is, generally speaking, there'll be consensus as to what the Fed is going to do on a day of the meeting. But today, what you're actually seeing is the bond market pricing in a 30% probability of a rate hike. So pretty unusual given historic consensus. So when we're talking about volatility, how do we navigate those type of circumstances? And what we do is we always come back to, what is the long-term plan? How do you stay invested? And let's lean into volatility and use it to our advantage. How do we do that? We can tax loss harvest. We can diversify and rebalance. And most importantly, re-underwrite what our strategy looks like to ensure we're prepared. And, we always use a saying, it's time in the market, not timing the market. So staying the course and staying invested, but using these types of events to your advantage is something we spend a lot of time on.
And Wendy, in spite of all this volatility, we're also seeing a lot of market resilience at the moment. So, what's driving the confidence right now?
So I think that comes back to the fundamentals and it comes back to earnings, right? So take the headlines out of the picture, the short-term headlines. We're getting earnings reports that are coming out that are significantly better than expected. And of the 135 S&P 500 companies that have reported, 85% are beating expectations. So if we take a step back and we think about what drives returns, earnings, growth in earnings drives returns. Couple that with a very efficient labor market and strong GDP. And I think that's setting clients up to feel comfortable about their equity exposure moving forward.
And at the moment, where are you seeing the greatest opportunities and the greatest risks in this current environment?
Sure. Always a good question, and it does change depending on sort of where the markets are and where volatility is going back to the beginning. So opportunities continues to be around AI. Particular areas of focus are healthcare innovation, infrastructure, and actually emerging markets right now are cheap relative to developed markets. So there's an opportunity there. I'll also add fixed income. Fixed income is giving us an opportunity right now to add meaningful yield to portfolios. So again, going back to that balanced diversification, if we can lock in some higher yields, that's a great opportunity that we haven't seen for some time. In terms of risks, I mean, the obvious, right? Geopolitical, macro is very uncertain. The risks are also that we see inflation be stickier for longer. So again, coming back to how are we positioned, what makes sense, and to be mindful also of momentum. We were talking a little bit before this and just how the market moves so quickly. And look, when I started in this business, the way you did a trade, I'm kind of embarrassed to admit this, but the way you did a trade was that you wrote it on a triplicate piece of paper and you ran down a hallway and you handed it to someone. And then when it was executed, you called your client back on the telephone. Clearly, that is no longer the environment we're in. So what I would say is, as markets move faster and as momentum picks up, those trades that look really great can also unwind very quickly. So having respect for how quickly the markets move and how you're positioned, I think is a good reminder. And I think it's only going to continue to get faster and more efficient.
What do you tell clients in this environment to help them maintain perspective long term?
Yeah, looking back to that original structure that we put in place, and also thinking about the cycles that we've been through together. So we never know what the big shock is going to be, right? I remember March of 2020, I had clients on the phone, very, very sophisticated investors, ran funds, and they wanted to sell their equities in March of 2020. Why? We had never seen it. We didn't know how to handle it. So what's important to remember is when it happens, and it will happen, if we have not seen it before, we have to look back to what selling at a time like that does. Also, that continued diversification and really re-underwrite your portfolio. So what I mean by that is, what do you own? How do you own it? And is it sized appropriately? That is the piece that we all see allocation shifts because of performance, but ensuring that our investments and structures are sized appropriately can have a meaningful impact.
That was Wendy Holmes, a private wealth advisor at Hidden Oaks Partners of UBS Wealth Management. I'm Erin Rao, and this is Asset TV.